we're going to get that inflation at 2%. So I actually don't think we need to increase rates anymore. And I think we are at a good place in that regard.
All right, that was Fed Bostic saying what? That he thinks that we're going to get to 2% and we don't need to do more. So he's a little dovish here. Look, we're going to get to the war. We're going to get to how the Middle East is affecting the markets right now. What is the impact? What are some of the trajectories that we got going forward? Are we bearish or bullish? What does it look like? Right. But I want you to hear what the Fed are saying. It's the Fed cycle right now, the macro cycle is being dominated by the war, obviously. But Fed Bostic came out today, spoke, and he said what? He said, hey, I think we've done enough. I think we can pause here. The Atlanta Fed governor. So also, let's take a look back. Also, last week we had Mary Daly. I believe, is it Mary Daly? We'll see who she is. She was also very dovish. So check this out.
The rise in yields actually does the Fed's job for it. Would you agree with that?
That is actually how it works. The bond market has tightened quite considerably, over about 36 basis points since we met in September. Well, that is equivalent to about a rate hike. So then the need to do tightening additionally is not there. If financial conditions are sufficiently tight, our work is not necessary because we don't need to boost them more.
Right. So Mary Daly, Fed Bostic, right? You have some other hawks, but we're getting closer to the end of the tighten cycle. Okay, that is the point here. Now, looking at 10-year rates, this is the benchmark rate. You have 2-year rates, you have 10-year rates, but looking at the 10-year, let me make sure that we are not missing anything. What up, chat? What up, dude? How you guys doing? Slime Z, Asan, welcome back. Let's give you guys that. Sorry, I need to get this. Anyways, yeah, so let's go. Let's go. Well, this is crazy, man. We got to, by the way, Tesla getting back above VWAP, watching in my charts over here. You know, I'm long Tesla. We'll check out my trade. I'll show you my trade. I'll show you my size where I'm at right now. But let's get back to the content, okay? 10-year yields. This is what we're looking at, 10-year yields, right? The Fed is dovish. And here's what I'm saying. If we're staring at peak rates, Fed, which is the Fed stops hiking, right? November, maybe because of war, maybe because of inflation, 10-year peaks. Okay, we get the 10-year peak. We get the 30-year peak. Peakish. We'll see how that goes. 2 years already peaking. And the dollar peaks, then I think premium stocks can see a violent rally, right? When I say premium stocks, I don't mean all of the stock market. I don't mean all stocks. There's over 3,000 of them. The premium stocks, in my view, what is premium? Well, NASDAQ for the most part, Tesla, Meta, Palantir, Amazon, AMD. I am very bullish on those. There's other stocks out there you can find. Cybersecurity starting to make a bid here. But for the most part, if this 10-year peaks, right? And it's not like I say peak is going to just fall apart, even though some people do say that. Tom Lee says when you go up this violently in rates, you don't just trickle down. It's a violent downside rally because the shorts are covering, right? The ones who are shorting the bond market are covering, and TLT is oversold. It's extremely oversold. Violent rip. So stocks, stocks are going to rally here. Anyways, premium. Now, what do we mean by premium? Okay, let's quantify it here. Not just say the names, but what are premium stocks? Stocks that can buy back shares that create more EPS. If they're buying back their shares, they're removing shares from circulation. That creates more scarcity. That also pumps your EPS, earnings per share, right? Your earnings don't go up. They don't even have to go up. But if you remove shares, then the earnings are bigger versus the shares, right? Earning per share go up. Debt funding via money market funds. So these monsters can fund their own debt with the money market funds, right? That is very bullish. Disruptive innovation, secular adoption alone, that's not enough. But if you do have, the share buybacks, you have the monstrosity of pure revenue growth, then your disruptive innovation stocks are going to do well, right? Pricing power, they have brand, Apple, Microsoft, increasing efficiency. So margin retention, this is the year of efficiencies, right? So margin retentions, also pure revenue growth, we kind of said that, and whoever benefits from the fiscal policy, right? They don't depend on just consumers, but the Inflation Reduction Act, the Infrastructure Bill, and the CHIPS Act. That's what I think we're staring down the pipeline here. Okay, I think that is the bull case here. Green day so far, yeah, a couple green days so far. Now, what do we go to first? No, we'll get to what gets the Fed to pause as of the inflation report coming out on Wednesday. But for now, what we're looking at is economic activity, right? What is the U.S. economy and the market sort of looking like? This is a breakdown that I got here. Economic activity is recovering. Why do I say that? The ISM manufacturing survey is the most leading economic data point, right? I mean, some people can, disagree with that. That's totally fine. But as far as I know, and within that data point, new orders going higher, production going up. So, well, everybody thinks we're heading into a recession. I think we're actually, falling into a recovery, and it's under the hood here. Now, the war could disrupt a lot of stuff here. Okay, the war is obviously a black swan event. So far, it hasn't expanded. Which, if we do go, if Lebanon attacks, if the Hezbollah from the north attack, they got a way bigger army than Gaza, then yeah, we might be in trouble here, right? We might, Iran is involved to some degree. What is Iran gonna do? So if it expands, we might get a black swan, but there is a lot of data, and we'll get over that to show that usually the market goes higher during these first invasions. Okay, so consumers are seasonally strong. Why? Holiday shopping, Thanksgiving, Christmas, whatever it is, Cyber Monday, holiday strength. So the consumer will be strong. Now, January, February, I'm a little more bearish on the consumer. Obviously, they're done spending. They're done trying to, appease socially. Hey, look, I got you gifts, right? Or I spent a lot, right? Anyways, it's going to be over. New Year's resolution, they start saving money, they go to the gym. Employment, seasonally strong. Obviously, UPS recruits people for deliveries because that goes up. Real estate, housing in recession. Let's keep it real. Inflation is tame at the moment, and we're going to get more of that evidence tomorrow. Yeah, tomorrow and Thursday, right? PPI first, and we're going to get over that. Inflation is pain. Liquidity is very weak. I think it's at the cycle low, but liquidity is weak at the moment. Okay, now if it accelerates going forward, that's a big tailwind for the market. Volatility is at a local top. The MOVE index peaked out the other day, and really it comes down to rates. If the 10-year yields peak, volatility is going to peak unless you get nuclear war. Obviously, volatility is going to start to move up, but you can't predict that. Rates are also peaking, 10-year, 2-year, 30-year, starting to peak here, right? Maybe in the short term, but we will see. I think they're very overbought or very oversold. The sellers are exhausted here. So rates are peaking. Technicals very bullish for the S&P. We're going to go over that. Fundamentals starting to recover. We're getting positive earnings going forward. Positioning is very bearish. Great setup for a bullish. Monetary policy is tight, but fiscal is very accommodative. Okay, so that's what we're staring down the pipeline. Now, what keeps the Fed from pausing? What gets the Fed from pausing here? Okay, core. This is now, hey, there's a couple things that could keep the Fed from pausing. Or to pause, but we're looking at core, right? Inflation. We know volatility. We see that oil is very volatile. They're not responding to that. Okay, so core PPI tomorrow, that leads inflation. Now, is core what they're going to focus on? That's not what the market focuses on, but what does it do? It does offer some pretext for the bond market traders who are going to control rates at this point for the long end, right? 30-year, 10-year. So traders, if they do cover the shorts and get long TLT bonds, markets go higher. If bonds recover, markets go higher because rates come down, right? So we're looking at core PPI, producer prices tomorrow. We're looking at, and then Thursday, that's the more immediate print that we need to see. Probably the more important data is going to be core inflation on a year-over-year basis, on a month-over-month basis. Okay, so let's see. I think we need to be in line for the markets to go higher. Nothing to the upside, obviously. No surprises to the upside. Surprises to the downside are welcomed. We welcome surprises to the downside. Duh. We want inflation lower, especially while productivity is picking up and the economic cycle from the manufacturing sector of the economy is picking up. A lot of onshoring for manufacturing and industrials, right? So next, looking at the big surprise here is going to be oil. Crude oil is still the wild card. Okay, for the economy. The Fed is going forward. How is the Fed going to respond to oil? Last time that he shrugged it off. He said, we're not worried. Higher oil equals higher gasoline prices. Okay, so here's the other part you got to think about. If oil does elevate, you get higher gasoline prices. And what does that do? That's going to remove some of the money from consumers' pockets. So that kind of tightens financial conditions anyways, right? So I don't think oil is that big of a threat unless it really spikes to 120, 130, 140. What's going to cause that? Not this war. This war is not big enough. Plus, the Israelis can protect themselves. They are destroying Gaza right now. Unfortunately, all the dead bodies. Pray for them. Moment of silence for the civilians who are not involved in the war. Moment of silence. It sucks. It is what it is, right? But you got to move forward. You got to punish these guys somehow and get rid of them because it's very unfortunate. All right. Ultimately, we got to tighten financial conditions. Does the Fed even care about oil? I'm not sure. Crude oil, what do you say, Hassan? Crude oil is rising, but gas prices are not changing. We had that sharp drop. So anyways, here we got Prime Day. So Amazon Prime Day tomorrow, today and tomorrow. Okay, so that's already today and tomorrow, right? And I think the market is sniffing out. Here's what the market is sniffing out. This war is not that significant. Let's go to the technicals, actually. Let's go to the technicals. This war is not that significant yet. Not yet. Okay, it's not that significant yet. We see we're still in a bull trend here. We're still in the uptrend for S&P. With seasonal spending to come online, consumers will strengthen, like we said. Fiscal policy will strengthen the economy, right? Adoption for these secular trends, innovations are going higher. Okay, so what else? We got holiday shopping is already starting, right? A lot of people are spending. This is probably the last leg for consumers, I think. This is the last leg for consumers. They're going to spend. January comes, that's it. But this sets up for a Santa Claus rally. You know, we've said it multiple times. I think this is the Santa Claus rally for those reasons exactly. Okay. Unfortunately, carbides, I couldn't see trophy yellow smiling. I don't. It didn't come out. Stupid. Algorithm. I'm just kidding. I don't know. Crude oil is rising, but gas prices are not changing. That's kind of good. I think we're in a really good position for a rally just because people are off sides. Right. Positioning is very negative. Sentiment is very negative. So any sign of positivity, we're going higher. If inflation falls, we're going higher. If gas goes up, well, nobody cares because consumers will keep spending. It's going to take a black swan event, as always. As I've said always, it's going to take a black swan event to really break the market back down. Okay. Giovanni Claire, I had a question on your last video. Let me pull this over so I can kind of look in the camera. I had a question on your last video yesterday. You mentioned we will see an increase of manufacturing services until year end. Would this be against what the Fed wants? That's a very good question there. That's a very good question. Let me take a drink so that I don't, pass out while I say this. So I don't think the Fed cares about growth going higher in the manufacturing sector. Why? Because as long as production is up, right? As long as productivity is good, the market's going to be fine. So as long as production goes higher, which kind of eats out inflation, meaning when growth and inflation kind of move together, but productivity rises, meaning more units of labor per hour worked, you're producing more services and goods. Well, you're producing more supply, right? Prices come down. So as long as production moves up, the Fed's going to be okay with manufacturing going up. Now, services, on the other hand, the production and the service activity right now is not as of a golden pocket as it is in manufacturing, meaning consumers are going to be spending, right? And that's going to be consumer spending there. So that's 70% of the economy, and I think it keeps GDP up. The Fed could be worried a little bit, maybe, possibly, but we know growth is still falling, right? So the Fed knows we're headed into seasonality, which stocks are heading into seasonality. And maybe consumer spending would be a little hot for the Fed, but they also know that that's going to fall off a cliff. Because look, forward-looking indications show us the mortgage market is frozen. Really, we're more teetering towards growth falling apart. We're more teetering towards that. But the employment report showed us that we're headed into a season of spending. So I think the Fed knows once we hit that, Q1, things are going to slow. They're probably more worried about fiscal than anything, right? Stimulus checks. If Joe Biden signals, hey, we're going to give out stimulus checks, which I don't think is anywhere close now. We're probably not till next year when we actually experience services go back into retraction, right? Right now services are above 50. They are falling this past month. So once they start to, come down and productivity falls, then we can put that on the table. So to answer your questions, in a short term, would this be against the Fed, what the Fed wants? As long as production goes higher, right? Efficiencies, AI helps with that, easing the labor market. What do we get on last Friday? Average hourly earnings, which is wage inflation, down. So average hourly earnings is actually falling, no wage inflation, while production is picking up, while productivity per unit of labor, right? Each, per unit of labor per hour is going up. So no, productivity is up. I think the Fed likes that. I hope that makes sense. I feel like next year is going to be a mess economy wise. It could be. Look, it's hard to predict the market. So you got to look at positioning. For the economy, it should be a mess because those rate hikes are coming in, right? But on the other side, and these are really good questions on the other side of it, think about this. I'm going to get to you. Market about to puke, 10-year Treasury. Let me get to this bear market guy here. Remy, don't run away yet. I'm going to disprove your theories or give you the probability. So yeah, the economy should come in weak next year. It should after this spending, but we're in an election cycle. Now there's a war in Israel, bro. In these situations, politicians are going to do handouts. Oh, inflation comes back. Not if productivity's up. Not if the consumer collapses and you get a stimulus check. No, it's not going to cause more inflation unless housing really goes up. Housing's not going up because housing is being held down by those high interest rates, right? The mortgage market, what did Mary Daly say? That the Treasury market or the bond market tightening, higher yields are doing the Fed's hikes for them. So if anything, the economy will be in trouble, but we're at that teetering point where more stimulus comes, right? We're going to get more stimulus, whether it's from the central bank, who knows where it's from. If something breaks, the Fed steps in. If another country breaks, they don't have enough dollars, well, those Fed swaps step in. So that doesn't really relate to our economy, but it does relate to capital markets appreciating. Now, if the consumer falls off a cliff, which I expect, just look for, is there going to be more bills for the consumer? If not, then growth starts to decelerate. But at the same time, as long as jobs are plentiful, right? And that's going to be in different regions. As long as jobs are there, people are going to keep spending. They can support their credit card. They can push it out till the summer. So I'm expecting, hey, yes, things do slow, but you either get fiscal, so you get Joe Biden stepping in, or the White House, here's some checks, or it might be not direct checks. It could be some type of stimulus comes in, and in any shape or form, it's going to come in. It could be for the mortgage market, right? We're going to put them at 40. They're going to do something in the government to keep the economy from falling apart too fast, right? That's my expectation. Now, next, also with employment, people can roll that debt forward. They can keep paying off their debts, and maybe, you don't see it till some people are saying mid 2024, but that's an election year, which I still think there's going to be more stimulus. So I think if there is a recession, actually it's going to be somewhere in 2024. It depends on what the fiscal authorities actually do going forward. That's what I think. I know that was a long dragged out answer, but there's so many variables that are changing in real time. So we got to keep that in mind. Now, Giovanni, if you are looking here, let me move this over a little bit, and we're going to look at the intraday here. If you're looking for intraday movement higher, is core CPI coming lower and CPI coming out at 3.7 or lower be something to look out for? I would say this: if core comes in lower at all, it's bullish for the market. If it comes in low, if it comes in as expected, the market's going to be bullish because it's oversold. People are off position. They're over positioned right now. People are they're under position. I'm sorry, they're under position. So if CPI comes in at all, core, as expected, it's neutral to bullish. If it comes in under expected, very bullish, anything above is going to be bearish. It could be very bad, right? With a little more credence on core, because we obviously know oil is pushing headline, and headline is not what the Fed is so much focused on. That's what the market's looking like. Hey, headline can be a little higher. We got that giant breakout in oil, but nobody trusts it because it broke down 10 points the other day. So oil headline is not as important right now. Okay, it is not as important. Even if it comes out a little higher, the market's still going to be okay with that. It needs core to be as expected or lower than expected for the bulls to take over. All right, does that make sense? How's Santa Claus thesis looking? Tigger Media, what up, Tigger Media? We did just go over it. The Santa Claus thesis. I mean, we'll go over it again briefly because it looks like a couple more people are jumping on. Let me first attack this bear here. Acquiring SQQQ shares, and you will profit from the tech bubble crash. Okay, so Remy here. 10-year treasury yields have bottomed. 10-year have bottomed. Okay, you think they bottomed. That makes sense. If you think they bottomed, the market pukes, sure, imaginary money, acquire as shares, you will profit from the tech bubble crash. Okay, well, Remy, I mean, give me a above ninth grade level explanation. You're just giving me if you don't care, if you're not really interested in convincing anybody, that's fine, but that's not really a good explanation. Just the market will crash because yields go up. You're right. If yields start to break out, then markets go up. But what do we just look at? And here's going to be for you, Tigger Media, and then I'm going to get to you, Josh. Shout out to Josh. Josh, I know you got the lowdown on other stuff that we need to hear about. So check this out. This is what we're sort of looking at. There's a double top on treasury yields right now. The bond market is capitulating. People are coming in, and we talked about this yesterday, as a flight to safety in U.S. treasuries. If so, yields have topped, right? Yields have topped. If bonds are becoming the flight to safety for global instability to some degree, then yields have topped. So far, that could change, but yields have topped. Okay, that's kind of the thesis there. And then also just read this, Tigger Media. We went over this. If the Fed stops hiking, you're going to get that tailwind, right? Share buy. Well, these are who's going to actually benefit from that. But overall, dude, don't reset on me. Overall, economic activity is recovering, rolling expansion, rolling recession, right? Consumers will spend seasonally, employment, seasonal strength, right? Real estate still in recession, but hey, whatever. That keeps inflation down too. Inflation is tame. We'll see more coming forward. Liquidity is weak, but it's set to pick up. Macro forces are peaking. That's more important. Dollar rates, vol, those are all starting to peak now. Volatility is peaking, rates are peaking. The only negative that I saw was triple B spreads, which is credit risk, is starting to rise a little bit, but that could be because commercial real estate is about to roll over. Flight to safety route. There you go. Didn't even see it yet. I didn't even read it, Josh. See flight to safety in U.S. Treasury bonds today. So those rates have peaked. I'm sorry to say it. I think I'm just saying we don't know if they peaked, but the probability that they've peaked for the next month is really high. So far with the war, there's a flight to safety. Whether, whatever it is, there's a flight to safety. And let's get the visuals on that. Right? Here we go. Got this switch up a little bit. So 2-year, we know the 2-year is not going higher. The 2-year is stuck at the moment. Okay, the 2-year is stuck at the moment. Let's go here. 2-year stuck at the moment. Why? Well, shadow QE, bro. Shadow QE. We got the Fed facility coming in, buying those yields, ain't going up. 10-year. I think they've peaked. They come to the trend before they bounce, probably. They probably come into the trend before they bounce. And then we'll check from there. But we could do something like this for the 10-year. Remember, this is the benchmark rate. So there's a bunch of rates, but maybe we come down, we bounce, come up, and then we'll see if we have a lower high. Then I'm expecting yields to roll over. Maybe they move in a range sideways, right? That's okay. Stocks can still move up while yields move sideways in a range as long as they don't move up. And guess what? If the Fed does pause and keep signaling that they're going to pause, the rates have definitely peaked. Okay, that's very bullish for premium stocks. Not all stocks, but premium stocks. Okay, TLT bottoming, that's literally the opposite there. DXY, we got the dollar rolling over, right? This is the largest drawdown for the dollar that we've seen for a while. It doesn't mean the dollar is completely done, but it is testing the trend. So if we get more weakness in the dollar, that's going to help stocks to rally. Oil, if oil just runs sideways from here, that's going to cause stocks to rally. Forward-looking expectations for inflation are going to fall down. Gold, nobody cares. It gapped up. But, gold did all right. Now, nat gas, this is a threat. Nat gas might keep moving up, which would increase electricity costs to some degree. And then we'll see how big that move is. But I hear there's a lot of inventory. I think you guys were telling me that. So, yeah, Santa Claus Rally, Tigger Media, still intact. The bull market trend is still intact. The only reason the market struggled today was literally, I think it was because obviously the fueling of the war. We had forces in the north because right now Israel's being attacked. Israel's being attacked on their, let's see if I can say this, the western border, right? The southwestern border is where they got attacked. They've taken care of that. They're destroying Gaza right now, right? A lot of humanitarian aid is going to be needed after this war, but now they're getting attacked from the north. From Hezbollah. I think that's right, Hezbollah. And they're a lot more formidable foe, obviously fueled by Iran. So that is the problem right now. If that continues, if it escalates, then, that could cause more escalation. That's where the market reacted negative because that means, okay, the war will expand, possibly more inflation in oil, maybe not, I don't know, but also a geopolitical risk. We just don't know what's going to happen. So I think this actually peaks rates. So the market might struggle, but the market goes higher because everything signals rates have peaked at this time. Okay. Off topic. What do you make of Carolyn Alice saying SBF directed her to commit crimes? Typical for, I'm not even going to say it. But hey, people like that, they're going to take the easy way out. Of course, what female do you know that's in crime is going to take responsibility? They're criminal female. I don't think so. Not even criminal men take it. So I don't expect Carolyn Alice. She's going to play victim, obviously, right? SBF, he's a simp. He's a fool. Don't ban me, TikTok. Anyways, dumb idiots. That's all I got to say. Also, there is some weakness in crypto because they're saying that a lot of the fueling of money is going towards, Hezbollah and some of Gaza, some of the, dang, I can't even think of them, you know, the terrorists through crypto. So that could be a negative, you know, a negative thing for crypto in the intermediate. We'll see, right? Biden didn't say nothing. He came out and didn't really say crap. So we're kind of on the edge still, seeing what's going to happen there. Anyways, back to the markets, right? Let's look at this price action. Let's take a look at price action here. So getting back to it, look at the VIX. VIX, after all this, has peaked. The VIX peaked back October 4th. This was the employment report. So far, the market isn't really that concerned with this war yet. Okay, not yet. All right, the MOVE index, bond volatility down. So I think this is peaked. This is important. Okay, this is very important. I think it's down. Put to call ratio peaked, coming back down. You see credit is getting bought up again. Junk bonds, high yield bonds getting bought up again. These are corporate bonds. Very good for the stock market. Here's S&P. What do we say? It needs to fill the gap. Did it fill the gap? It got close to filling the gap and then started to reverse a little bit. So we do have S&P 438.50 is what I said, somewhere between. Okay, it got rejected at 435. So we'll see. I mean, tomorrow is obviously the PPI report. I think it's going to be fine. I think the market keeps going higher. Or maybe we have a red day, obviously, to anticipate the real report on Thursday. That's what we're looking forward at, right? That's what we're looking at here. So that's my expectation. The Qs are actually stronger. The Qs have already kind of made it to the top of the range. So Qs are a little stronger. Why? Because there's more premium stocks. There's a lot more premium stocks in the Qs. What do I mean by premium stocks? Okay. And it could be premium assets too. It doesn't have to be stocks. It could be Bitcoin. It could be crypto. It could be other stuff. But what I mean by premium is pricing power, right? They're able to buy back more shares, increase their EPS. They're able to fund their debt through money market funds. There's some type of disruptor, innovate Tesla, some type of disruptor, pricing power, right? And pricing power, a lot of people say pricing power is only when you can increase your prices. I wouldn't say so. I'd say you have pricing power when you can cut rates with, when you can cut rates, Fed, when you can cut prices with confidence to gain more leverage. Now, Tesla's car prices are falling like a rock, and that is going to create more demand. As much as the bears say, no, it's not, it's going low. We'll see. Elon, I think right now when we look at Tesla, everybody's like, all this bad news hitting Tesla, right? There's multiple bad news hitting Tesla, but it's not going down because it's already priced in. First of all, they already said they'd miss production in the last earnings call because they're building a new factory for Cybertruck, right? They're adding features to the factory. They're increasing their productivity down the line. Plus the cost of production, the batteries is going down. So we might not even see that bad of margins, right? We'll see. Either way, the market is going to predict. The market, I think, is looking at the bottom of margins for Tesla. These are bottom of the bottom of margins is going to be huge for Tesla. But look at this wedge. How do you argue with this? Like, this is I've been tweeting this on Twitter. Look at this monster wedge pattern. Okay, this is your price action, you traders. Big wedge pattern. On top of that, let's zoom in. You got multiple wedge patterns on top of that. Okay, look at this. Take a look here. Look at me. No, I'm just kidding. That's what Tesla's saying. Look at me. Looky here, bro. Looky here. All the traders know what I'm talking about. Another wedge pattern broke out. Okay, forming another wedge pattern. I posted this last night. Tesla wedge within wedge broke out again this morning. Now it's pulling back into the trend only because, and this is actually good. It's going to give more opportunity for buyers to step in, only because the overall market rolled over pretty hard. Now it's under VWAP. Okay. The interesting thing is IWM, small caps are actually above VWAP. Small caps are strong. So you're getting market breadth here coming into the market. So there's Tesla testing the top of that trend. When I draw the, we can get back to the economics if you guys want. Let me know what you want to hear, what you want to get out of this. When I draw the Fibonacci retracement, Tesla has been moving somewhere between blue, the 1.618, and the 2.618. So right between here, on these last upside moves. So this should put us, and it depends how earnings go, somewhere around 400, right? This should put us testing all-time highs. To be more conservative, maybe around 350, but testing all-time highs. And you know there's monster traders. You know there's going to be short squeezes. You know the shorts are going to cover after earnings if it isn't as bad. I think there's a real chance for a breakout. I am not advocating to trade Tesla at all, though. I'm not advocating that at all because on earnings anyway, because it's dangerous. Okay, you want to see my position? Let me show you my position. So you guys know I'm not full of crap. this is a fake account. No, I'm just kidding. I bet you people do that though. They probably have fake accounts. Where's my account? Oh, here it is. All right, here's my Tesla account right now. So we're looking at 5 contracts. Okay, just got about 5 contracts. Let me widen this out a little bit. Okay, so I got 5 contracts. Expiration January 2019. I'm getting a little nervous over the next couple of weeks. I might extend that to April because I want to see a faster move. If I don't get a faster move, I'm going to cover and I'm going to extend these out to April for, you know, I want to see a sharp move. We'll see around earnings. I'll tell you my game plan going forward. But the last call I bought was October 5th. Last couple of calls I almost added today, but I'm like, with this, if Tesla moves up quick, I'll actually think about taking some off into earnings and then reevaluating. But if it takes a while to grind up, I'm going to hold it and then I might just sell against it. So I have a very complicated way of doing it. All I'm really showing here is, hey, I'm long Tesla right now. Okay, you know I'm long Chainlink, you guys, but Chainlink is not a trade. Tesla, I'm trading it. I'm going to trade this cycle. And if you have questions about that, let me know. All right, so there's my position. Take a screenshot, whatever, if you want. And then you can ask questions about that going forward. But I am taking risks there. What else do we got here? S&P get dumped next week. Oh, S&P might get dumped next week. After the gap fill, they will come up with a different story. Cool dude 200 for 101. You might be right, bro. You might be right, which is why I've been saying that let's go to SPX. I think the gap on SPX is 4,400. Yep, look at, we got it right there on screen. Got it right on screen because we've been talking about this for a week. Which is if the S&P does continue to gap up, it should fill this gap at 4,400, right? 4,400 is the top of the gap. And then that's where you look for the short. But you don't just want a short here, right? You're not just looking for the short. What you're looking for is, okay, the initial reaction is bearish. Let me put a position on here. Let me get short. The initial reaction is bearish. Make sure you know how price action actually works. Also, you need a catalyst. You need a catalyst, right? You need the war to get worse. You need more uncertainty, which is likely. You also need rates to keep going higher. If rates don't move up, that rates are a really strong catalyst. So if rates keep falling and the dollar falls, good luck with the short. Maybe you get a day short, but it could just bounce off and keep going up. So I think the most immediate, the strongest catalyst right now in the short term, obviously the war, any kind of reconciliation, or we don't want to see a drawn out war here like it was in Ukraine and Russia. Okay. But I would say rates are the most important thing you're looking at. Rates in the dollar. Rates in the dollar. Easy as that. Rates, dollar, rates, dollar. Rates come down, dollar comes down, markets go higher. Markets fill the gap and continue to break out. Why? Because consumer spending is set to pick up. Why? Because fiscal policy is still coming online. Why? Because economic activity is actually picking up, right? Yeah, services are a little lag. Services might have been weak in the last month, but bro, look forward. A lot of people are spending. Holiday season, holiday Santa Claus rally. That is the thesis. And I don't see anything deterring that at the moment. Now let's say the stock market stays sideways. Who cares? Tesla, Meta, Palantir, Amazon, Google, AMD, these are going to break out because they don't care about consumers. Tesla does to some degree, but I think a lot of the thesis for Tesla is they just set up a building for Dojo. People are looking at the AI, looking into the AI narrative. It has the largest secular trend, which is destroying all ICE vehicles, right? They're not literally, but you know what I mean? Everybody's switching to the ICE vehicle and fully autonomous XYZ. So that's what we're staring at there. Now, what else do we got going on here? Peak rates, peak technicals. Okay, yeah, let's get back to the technicals. So that's what we got there. Now, any other questions? Let me know. There we go. Man, these things are lagging. Will the oil price increase? Will the oil price increase if we see, I think is what you meant to say, in September? Wait, what? Will the oil price increases? Okay, my bad. I can't read. Stupid. Will the oil price increases we will see in September be reflected in October economic data that will come out? It should, bro. It should. You know what's interesting here? We'll look at this because that's a really good question. I was expecting that and we're gonna look into this. I was expecting the expectations for headline CPI to be higher. So I'm not too concerned about it because we're not really focused on headline. Obviously, we saw oil just collapse last week. So check this out. Let's go inflation rate year over year. Look at the expectation. The expectation is 3.6%. So consensus is actually down. So I don't know. Maybe I'm wrong. Maybe I'm wrong about this. Maybe they're smarter than me and they're saying, hey, no, the expectation is lower. So I would say, you know, just from understanding how oil spiked, I would think this number was higher. That's what I would say. But the expectation is not. Consensus is lower. So that does kind of set you up for a bad scenario if it is true. But again, I think the Fed and the market is more concerned with core. So because we saw oil just collapse, how do you price that in, right? It just collapses. Are you pricing that? So no, I don't think so. I don't think it's going to be that big of a deal. Remember, it doesn't even move up core very much. Oil is a very small component to it'll be transportation costs. So we'll see how that plays out. Claire, GG's. Yeah, I agree. I want to see this gap be filled and rip right through in order to keep pushing further. If not, I would want to see the SPY get rejected and go back to 416, 418. That would be a nice short. Don't get me wrong. That will be get it. You really want to say, is there enough evidence for the market to get short here? Right? It's not like going to be a day event. It's going to be a lot of stuff climbing. I think you need yields to go up. I think you need the dollar to go up to see, or something to break initially, or the war to get worse. Those are your three ways. Oil collapse, nat gas collapse. Good luck tomorrow. Dimayush, what do you mean? What do you mean, Dimayush? You probably took what I said out of context. We talked about nat gas actually moving higher, which would be dangerous because obviously energy costs would be moving up. And then we talked about oil falling really well, the Fed not focused on oil too much because, you know, it ripped higher 95 and then drops at 82. So oil is going to be volatile. There's a reason why they don't focus on oil too much unless it gets like 120 and like rapidly increases, right? Like it did in 2022 when the Russia invaded Ukraine. PPI should be higher. Yeah, I think PPI, let's see, PPI expectations. I'll just tell you guys right here. PPI expectations year over year coming in at 2.3%. So the expectation for PPI is, you know, last month it was 2.2. It's expected to come at 2.3. Nothing, right? If it comes in above that, then that might signal, hey, headline's going to come in higher also. But again, I think the Fed's going to be focused on that's core also. Core isn't really moving up much. We saw PCE is actually falling. So we'll see. I know when you guys are bearish because you're like, inflation's going to come out hotter. PPI is going to go higher. That's fine. Maybe it does, right? Maybe it does. But keep in mind, the expectation, you know, there's much more on the table. Investors are going to be much more likely to get long in this scenario than to get short. I know it sounds counterintuitive, but they want to get long stocks. We saw a gigantic bounce. I told you guys it's going to be moving in this pattern, and it is moving in this pattern so far. And we're actually getting good news here because oil broke down. Okay, oil broke down. It could trade sideways. Yields might be peaking. I'm looking forward. I'm not looking at right now or headline. We are looking forward. So PPI should be higher. Yeah, it should be higher for sure. The question is, does it come in higher than expected? That's the real question here, right? Market is very unprepared for bad data. That is all. I would say everybody's negative, Dimayush. I disagree. I think everybody is expecting bad data. That's why the market keeps going higher, because the expectation for oil went up. Rates are about to break something. There's a war, right? Everybody's negative, actually. Positioning is very negative. Fed Kashkari is starting to talk. We're going to see what this fool says. We talked about this yesterday. We'll track Fed Kashkari. He is the Minnesota Fed governor. I think I'm saying that right. And he's always pretty hawkish. Oh, he is speaking. Okay, let's hear what this fool says. He is saying, while we look at S&P filling that gap, Fed Kashkari, I'm optimistic we can shrink the Fed's balance sheet back to the pre-crisis trend line. That's bearish. We don't want to do that. We want to see the Fed balance sheet go up. Fed Kashkari, the economy and job market. But here's the thing. Yes, they might shrink the balance sheet, but at the same time, you're getting shadow QE, right? You're getting shadow QE. Who's buying, you said, Dimayush? who is buying the market, bro, go look at the price action. Unless you just call it a short covering. Like, did you guys not see Friday? And by the way, we called it. We said Friday is going to be the turnaround. We said Friday we should see a reversal in the market because people are way too bearish. And the employment numbers came out hot, Dimiush. You saw that, which the market didn't want to see. Market still goes higher. Because at the end of the day, people are going to do what makes them richer. They're going to get greedy. You know, they're going to get greedy. They got greedy. They bought NASDAQ. I mean, who are big buyers? Oh, okay. Who are big buyers? I mean, I don't know. I think they're just more likely to buy. The big guys are more likely to buy than they are to sell. They'd be more likely to sell when we get to all-time highs. So remember the 200 moving average, we pulled into that also, which was another support, the 200 daily moving average. Now, I am not saying we get above 4,400 on SPX. I didn't say that. I think we got there pretty quick. I think we come up to 4,400 and we need to see yields continue to fall. We need the dollar to continue to fall. We need oil to not surprise anybody. And we need the Fed to communicate more of the pause, which is why we're listening to Fed Kashkari, who's very hawkish here. And he's saying job market have been resilient. Then I would have guessed. So he's saying the job market is too hot. We seem like we are on the right track for a soft landing. Hey, that's positive. Soft landing. It's too soon to declare victory on getting a soft landing. Okay, so look at the Fed is basically, all these Fed guys are going back and forth, but there's so much hawkishness in their rhetoric that it actually sets you up. It sets up the market to move up when they show some dovishness. You know what I mean? If everybody was dovish, it'd be the opposite. If everybody's super dovish and all of a sudden you get some hawkishness, the market gets scared. But right now, that's the opposite. It's like weighing something out, right? You get too far on one side, boom, snaps back really quick. I need to get some better analogies for that. I think of it like a seesaw. Once the seesaw gets too high on one side, then it doesn't stick there. It starts to rotate on any sensitivity, right? It's almost like you're on a seesaw. One kid is obviously 20 pounds heavier, and the moment that the kid that is heavier pulling down the seesaw, right? Let's say he takes off one leg, boom, goes up. He takes off one leg. That's not a good scenario. That was stupid. I'm not even gonna try that one. Let's get back to your comments. Yeah, we need something to happen. We need something to happen in order to be full in shorts. My positions are light still. Yeah, it'd be smart to be light positioned. I'm like literally S&P, we don't know, right? I'm bullish on individual stocks. Let's check out Meta. Check this out. Meta's breaking out, like, right? These stocks have pricing power. These stocks are going to here's the other thing some of you guys are not really pricing in: earnings season. Earnings season. That makes sense. Earnings season. Are we not pricing in earnings? Hello, we're leaving the earnings recession. This is the big catalyst for stocks and individually is earnings season. Now we're going positive for earnings. We're going positive for earnings, okay? And not only that, but what did we say earlier? The premium stocks are going to crush it. They can retain their margins. They can retain margins. They're going to benefit from this spending season also. Fourth quarter rally seasonality, right? Seasonal stocks go up seasonally. Consumer spend seasonally. That means more seasonal jobs. So this is a this is a good setup. But now once we get into December, we'll second guess that. That's my thoughts. We won't break down. You need a strong catalyst to break the market back under 200 moving average. 100% agree. Carbides 100%. Are you still looking at Tesla? Are you out of Tesla carbides? What are you looking at on Tesla? What about another hike if we get bad data? I really doubt they do a hike in the face of this war. I could be wrong, but I'm going to say, if I had to guess, I'm going to say the probability of hiking during this war or uncertainty, the probability of hike is very low. As a matter of fact, let's check what the CME data is looking at. That's what we got to look at. Forget what I think. What is CME saying here? Oh, that was the wrong one. There it is. Come on, load up, bro. Yeah, so the chances of a pause look like they've been going up. Yeah, the chances of a pause going up. And I think this is due to the war. Why? I mean, I haven't thought it through thoroughly yet. I think it's just you don't want to cause more uncertainty for the economy during uncertainty with war, right? Something could happen with the US, and if they hike rates, they're going to have to reverse. I think they just want to stay on pause. There's too many things bouncing around right now. So the market is pricing in a pause. This is a very bullish setup for the market right now, okay? Especially NASDAQ. Especially NASDAQ. So that's my thought, Jervine, is bad data. Now, if they do hike, let's say they do hike, right? The chances are low. If they do hike, I think the stocks that suck more. I think they just suck more, and I think capital rotates into the best stocks if earnings are good. So if they hike, it's not going to be till November, right? It depends how earnings season looks, right? Let me see. This is important here. This is a really good question though. What if they do hike? If they do hike, I think you want to look at let's see what earnings look like going forward. Because the hike is what, November 1st or something like that? So what earnings do you have going into November? Oops, next month. So we got Meta. Dang, that's crazy. They're gonna hike right around big tech. That's, yeah, we don't know then. We're gonna hike around big tech. I would say this also, if they do hike, it might not be great. It's definitely not as bullish because maybe yields go up again, the dollar goes up again. That right. So the hike is not good. That's why the market is right now pricing in a lower chance of a hike. So the hike is not, we don't want to see the hike. If they do, I mean, obviously it's bearish, right? But the market will price that in beforehand. What you want to see is that chart that we just looked at, the See Me Fed tool watch. We want to see this change. We want, if you're looking for the hike, you know, the market's going to price that in beforehand. You're going to see the 10% go up to like 50%. It's going to start going up above. Yeah. What's your thoughts on CrowdStrike? What is the ticker? Give me the ticker. CRWD, right? CRWD. That is CrowdStrike. And then also I got you Demiyush. Walmart CEO says consumers are down first time in 10 years. Yep. I work for retail manufacturing transport company. All parts are struggling. And yet, yes, retail, right? We've said this before. I agree with you 100%. I don't disagree with you, Demiyush. Retail is set to slow, right? Retail consumer spending in those items, in certain items, are set to slow. Retailers suck because they have to borrow more money. You know, they don't make very good margins. So I think Walmart, they're going to suck. The consumer will spend. You got to be out of your mind to think they're not going to spend. I mean, I'm in the US. That's probably why. I don't know if you're Demiyush in the US because, you know, US guys, they will stack their debt. US people will spend what they don't have, right? Americans, my bad. Americans, for the most part in general, most of them are not smart or else we wouldn't be in this scenario. Most investors, I'm sorry, not most investors, most consumers will keep spending. They'll just throw it on their credit cards and they'll say, I'll take care of it, or I'll file for some type of bankruptcy, which I wouldn't even doubt if the White House says credit card debt forgiveness program in January, February, March. I wouldn't doubt that. Only because we're in election year, right? So but you're right about that. It is slowing down. Energy up is game over for stocks. A hike with energy up is game over for stocks. Also, energy contributes to earnings, so I mean it kind of cancels out. Depends what. And you're right. It's game over for certain stocks, but not all stocks. All right, CrowdStrike. Now, CrowdStrike has, look at, does CrowdStrike care? Tigger, does CrowdStrike care about consumer spending? No. Actually, you know what? Let's do this. Does CrowdStrike care that consumers slow down?
Nope. Nope. Nope.
There we go. I had to make sure it's working. Nope, they don't. Does CrowdStrike benefit from fiscal policy? Oh, I don't have a yes, but it does. Okay, CrowdStrike does. Cybersecurity threats. That's why Palantir is going up. Cybersecurity is a catalyst, and software companies are going to benefit here. So CrowdStrike looks really good. Let's look at the trend here. Let's go ahead and mark this out. Like, it's right on trend. I would just buy it into the trend, pulling back in the trend if it were me. Let's see where it's at on the daily chart. Look at this, above the 200, 100, 50-day moving average. CrowdStrike looks really good. Just broke out of that level. CrowdStrike looks solid. CrowdStrike looks really solid. What else can we do? Anchored VWAP? Nah, we don't need to anchor. This thing is on trend, bro. It's on trend. It's right on trend. Your next resistance is 205, probably 200 to 205. So yeah, I like CrowdStrike. It has a narrative, it has a catalyst. It's not really gonna get hit that hard as long as rates peak. I mean, yeah, CrowdStrike looks golden in my view. Hike with energy up. DMUS, you're probably long energy, bro. What are you, short Qs, long energy? Long energy, short Qs. And I think energy just took a dump, right? Oh, it bounced back pretty quick. Okay. XLE bounced back, a big gap up. Okay. I think energy stocks do better than oil, so I'll give you that. You should, energy, I don't have nothing against energy. Solar's getting smashed. Oh, that might be the bottom for these solar companies. ENPH, it has to be breaking out now. Ooh, ENPH is finally yep, what do you call it? The spring is starting to lift on ENPH. That's going to be a violent move. It went from 110 to 127 pretty quickly. I'd still wait for some consolidation. So if you are looking at ENPH, it probably consolidates. You want to see some consolidation and then a breakout, because that's a cup and handle. A breakout above the 128 is what I'm looking at. The market has a strong relationship with the number 3 and 5. With the number 3 and 5, Tesla is on its second minor wave. I think it breaks out and trends up. When? I don't know. I'll be rich if I knew, right? Tracking day to day. So you're talking about the waves. What indicator is that when you talk about the waves, 3 and 5? Is this like what do you call that? Wave trading? No, I'm just kidding. Tell me what it's called. I don't know what it's called, but yeah, my buddy does that. Some of the wave stuff. I don't know about the wave stuff. I just watch the price action. I mean, I just look at the giant wedge and I'm like, hey, what is the market looking at? But yeah, let me know. It's on wave 3, you said. I agree with you. Earnings can be a strong catalyst in any news about manufacturing profit margins, great earning projections. Yeah. See, I think for Tesla, when it comes down to it, the bad news is priced in. We already know all the, production slowed, but their best month is Q4. Their worst month is Q3. So it's priced in my view. And investors are going to say, they're going to look at this is probably what happens. Everybody gets short Tesla because they're going to see the numbers come in weak. And then all of a sudden, boom, it's going to go up. What the hell? Why is it going higher? Because investors are looking forward, bro. They're looking at the bottom of margins. They're looking at Cybertruck release. They're looking at the energy storage business. They're looking at the tax credit that comes in January. They're looking at the I already said the Cybertruck revenue, but they're looking at the, Model Y sales. They're looking at a strong fourth quarter, which won't show up until Q1 2024. So I think this trade goes into Q1 somewhere between, I can't tell now because there's other factors, but if everything else stayed equal, I think this Tesla trade breaks out. I think it goes to like 350 somewhere between January and December and February. Somewhere between December and February, I think goes to 350. It's now if the macro improves, it goes to 400. I think we break out all-time highs. That's typically what we saw in the third quarter. Let's go back to September during this year. Remember this year? Here's September. Here's your September. The price I remember this too. I was so pissed. No, I was right here. This is when I first got into Tesla. It just gapped down on me. I was so heavy, gapped down on me, traded down. I was hurt, and I just held on. And this was what? July, August, and October. I guess this was October. And then October's the bottom. right? September's the worst. Or well, I guess October's the worst. And then heading into October, boom, gap up on earnings. Now they probably beat earnings. Let me see. What do they do here? But I think the forward-looking data was good. So Tesla typically does really well into the fourth quarter. That's September. And then you fast forward into 2021. I mean, Tesla was just on a monster rally here. You get October again. Look at October, seasonality, weakness, sideways. And then you hit into November, boom, breaks out again. So, man, I'm not saying buy Tesla. I'm just saying, and look at, we go to the next one. Let's go to 2021. Same thing. Look at September, flat. I mean, it's climbing higher, but what I'm saying is once you hit October, the end of October, and into November, it just elevates. This one was a little quicker, though. That was the last peak. So I think we're about to break out. I think we're going to break out. I mean, my bets are on it. You've seen my position in Tesla, waiting for the home run, big wedge pattern, pretty clear. Could we retrace back to 250? Yeah, I think we need to hold 250. Earnings could be flat and then go up, but it's my thoughts. The waves are seen on the daily time frame, trend consolidation. Is this something that you need like an indicator for, carbides, or is it just you just eye it out? Trend consolidation. Yeah, I don't know. I don't even know how to do it. Here's wave 1, wave 2, and then wave 3. That's how I do it. That's how I'd look at it. This is from the Dow theory and the Elliott. Oh, there it is. Elliott wave theory. Fibonacci sequence 3 and 5 are numbers in the Fibonacci sequence. Okay. I mean, to me, it's like 1 the charm, 2 the charm, 3 the better. We'll see. And then 2, look at the 200 just starting to get elevated. We're above that 50-day moving average. I mean, it's coming. Stick with your technicals. Let us know any more constructiveness on the Tesla trade. I got long oil Friday. Oh, you got long oil Friday. What, didn't oil collapse? Dima Yush? No, I'm just kidding. It collapsed on one of these days, didn't it? Oh, you got long after it sold off, huh? The people are really convinced to buy oil here. I mean, that was a good call. It was oversold, which is why I'm still saying oil is the wild card, because it got very oversold and usually you get a bounce. Okay, there needs to be more global. I mean, the war doesn't help oil go higher. I mean, lower. So yeah, okay, fair enough. Do you use Webull? I do not. Are there any index options on NASDAQ 100 like SPX and XSP? What the heck is XSP? I've never even. Oh, those are mini SPX. Wow, I never seen that. Shame on me. I didn't even know that existed. S&P 500 mini SPX options index. Interesting. Wow. Index options on NASDAQ 100 like SPX. Well, have you tried let's see. The only ones I know are obviously QQQ. But you're looking for like SPX, right? Full end. I mean, QQQ. Why don't you just use QQQ? Triple Qs, bro. That has the most volume also. Triple Qs have the most liquidity. So I would jump into triple Qs, my man. We got the 3 phases here. There are 3 phases to the market action. This is carbides. Accumulation, trend, distribution. The number 3 shows a lot. There's tons of examples. Accumulation, trend, distribution. Carbides, when you want to do a podcast, when you want to do a live and go over your trading, let me know. Let's do a live on YouTube. I got a lot of questions for you. I got a lot of trading questions. I have a curriculum, so I got some good questions. It'll be a good interview. Let's do it. Is QQQ a 1256 contract? Some people argue it, but I don't know what that is. A 1256 contract. Let me use my chat GBT to see what you're talking about. I don't even know. Oh, oh, this is for taxes. Okay, I see what you're saying. For better taxes. I don't know. Yeah, probably because of volume. I really don't know, bro. About the tax part of it. I don't really know about the tax, but you'll have to look that up. But QQQ is your exposure. There's your there's your exposure right there. And it is smart to think about that, especially with especially if you're a trader. So, nice. Bitcoin on the other hand, got this thing marked up. Bitcoin pulling back again. I mean, you got another wedge here. Pretty strong wedge. Actually, you know what? Let's use this. Hopefully it works. There you go. Look at that wedge for Bitcoin. It's already broken out of this. Broken out of this channel. So I think we're about to see wave 3. Boom, boom, boom. Right back up. I just call it wave 3 now. To 3,500. Pretty soon, Bitcoin is going to run up to about 35, 37. I got it at 37. I got it somewhere around 37K. I think that's what we're going to see next. Bitcoin at 37K. Ethereum back to 2,000. Reverse head and shoulders here. Obviously, if it doesn't break down, but I think Ethereum goes back to 2,000. Probably gets above 2,000. I mean, if Bitcoin goes to 37K, we're looking at ETH running somewhere between 2 and 2,500. And then obviously, man, if we get Chainlink breakout, I'm gonna show you guys, you crypto guys, this. I'm gonna show you guys the crypto stuff for Chainlink. Most underrated coin. It is not a blockchain. It is a blockchain technology. I'm waiting for this pullback. I want to get more Chainlink here. I'm looking for more Chainlink. Somewhere around 675. See if it breaks down. Do wedges usually break to the upside? Yes. Wedges, when they're coming from the bottom. So let me draw this for you. It's called I call it a dragon wedge. See it on my screen. So when you get a wedge, right, it kind of looks like, oops. You get a wedge, it kind of looks like that. Wow. When you get a wedge, it looks like this, right? Tightens up. No, let's get rid of that. Here's your wedge. Okay. Now, it depends where the wedge is coming from. If it's coming from the bottom, very bullish, it should break out and go higher. But if it's coming from the top, then it could still break out, but your chances are that it continues where it came from. So usually continuation. A wedge is a continuation. A wedge is just usually the most powerful setup that I know of. And when I say powerful, I'm saying the momentum really picks up in a wedge. And Tesla does the most wedges. So Tesla typically reflects the most wedges when it does. Like when you see a wedge in Tesla, I mean, it's game over. That's more powerful than this flag pattern. See, where's the last time we got a wedge? Check this out. I mean, I've been trading Tesla for 3 years, 5 years. 5 years? 3 years? Here's your last wedge. Here's your last couple wedges, right? Get a wedge here. Now, keep in mind, it's not the same macro setup, but point being that wedges are very powerful. So once it breaks out of this wedge, it goes up 70%. And we've actually been seeing this lately. This one breaks out, goes up 100%. This is also another wedge here. It's just a little tougher to see. Boom, big wedge. This one breaks out. I would say it cleared like right here somewhere. This one goes up 82%. So yeah, wedges are pretty powerful. This was just oversold. This was a flag. Now we're getting the wedge. So ultimately, best case scenario, Tesla probably runs to all-time highs. And, you know, it's going to run all-time highs, best case scenario. And I don't mean right away. I'm just saying year-end rally. We're looking at the year-end rally here. What else do we got? I see QQQ options more than TQQQ options, honestly, maybe because of the volume. So what phase are we in right now? You got to ask carbides. What carbides? What phase are we in carbides? Some mini ETFs charge ridiculous fees. Okay, so some of the mini ETFs charge a lot of fees. Do wedges? Oh, we already read that. What phase are we in? Yeah, I don't know. I mean, for Tesla, where I guess we're in phase 3. Palantir also catching a bid there. Broke out of this falling wedge. Could be a flag pattern actually. Looking for that pullback here. Hey, if bonds keep rallying, this is going to be very positive. Just need the bonds to rally a little more. All right, what else is this guy saying? Fed Kashkari. Israeli military soldiers are responding to Syria. What? To Syria launches with artillery and mortar shell. Now Syria is involved? Lebanon and Syria, bro, they're getting attacked from all fronts. Oh my gosh, this doesn't look good. This doesn't look good. You're getting attacks from Gaza, the Gaza Strip, southeast. You're getting attacks from the north, which is Lebanon, I believe. I don't know if Lebanon's actually attacking them, maybe. And then Syria, which is northwest or northeast. My bad. That's not good. See if there's anything on here. Any new news? Oh, you know what? We didn't even look at liquidity either. We did not look at liquidity here. And AMD is breaking out. I'd be involved in this, but I'm focused on Tesla right now, and I don't want to split my focus. AMD looks beautiful on a technical basis, but I'm just more confident swinging Tesla. Taking a large position in Tesla. I want to be able to sleep at night. AMD also, I don't know too much about AMD. So, anyways, liquidity. How's liquidity looking? Obviously, the Fed's balance sheet is still falling. The federal, this is the reverse repo, still moving up. So they're still buying those US Treasury. This is still, now this, I don't know when this gets drained completely, but it has a long way to go, right? This is 0 up here. 0 is, oh, no, I'm looking at this backwards. Where is it? Here it is. 0. Yeah, 0 is right here. So it still has a long way to go before it's fully drained. It started off at 2.5 trillion. We're at 1.26 trillion. So we've already seen 1.25 trillion come off into the market. And we have another 1 trillion. This runs out, I think, in 2024. This could be where the market really sees some volatility if the thesis is correct, which is a soft landing. I don't know, man. You just don't know. If anything, you need productivity to pick up where inflation comes back. So that's my guess. Anyways, RRP's picking up. Fed net liquidity starting to pick up also. See, where's that Fed net liquidity indicator? Let's draw this. Fed net liquidity. It did break down on us, but it came right back up. So Fed net liquidity coming in. Yeah, I mean, that's the setup right now. I don't know what phase we're in. I'm going to see if there's any more news before we get out of here. Anyways, throw me your comments, questions, comments, concerns, even comments. Is there anything you guys want to let the chat know going forward? There's a lot of information out there. Israeli soldiers have found the bodies of dozens of... Oh, I don't even want to say that, bro. What the... Are you kidding me? This is not good. I mean, that's just horrifying. But we're going to send more aid to Ukraine, huh? United States is considering deploying a second aircraft. Here, I might as well just move this over. The thing is, I don't want to be on Twitter. There's some crazy stuff on Twitter, so I don't want to just like, I don't want to like just show some stuff that I shouldn't, because you know how Twitter is, or Twitter X. The United States is considering deploying a second aircraft carrier, USS Dwight D. Eisenhower, as the USS Gerald R. Ford carrier strike group is set to arrive near Israel. The reasoning, according to U.S. defense official, is to deter regional powers from joining. That's a big ship. I mean, we can look at this. This is not off limits. This is a huge carrier. Oh, what the heck? Let's see, am I able to show it? How come it doesn't show full screen? That's weird. Guess not. That's a big carrier. That's the size of, that's bigger than a football field, that's for sure. So, to deter other people from joining. Oh yeah, that's definitely, that's like what, 2 football fields? 3? 2 or 3 football fields? It's a big carrier right there. All right, let me get back, see if there's anything else, any other updates. This is a very unfortunate event, but you gotta crush these dudes. Gotta crush evil. Can't negotiate with terrorists. Kashkari says the level of excess consumer savings is still a question mark. They said it'd run out by what, December? Would you say there, Hassan? What's important is how many F-35s and F-22s it carries. Oh, okay. How many it can carry? How many fighter jets it can carry? That makes sense. That makes sense. So I believe the way it works right now, we have Hamas on the southeast corridor of Israel, right? Let's see if we can get a map of Israel. Hamas on the southeast. And that is market end. Market's over. I got your question there. How big a percentage of your portfolio do you trade with Tesla? I mean, when it comes to my full portfolio, probably 10%, 10 to 15% for Tesla. But I won't do that big. If I'm doing another trade, if I'm trading SPY, it'll be like 1%. It'll be small. Depends who I'm trading when it comes to my portfolio. So anyways, we got Hamas on the southern. Here's the Gaza Strip. Here's the Gaza Strip. So you got Israel. Let's see if, I guess you can't really highlight it. Oh, there we go. We can zoom in. And you have, there's a Gaza Strip. It's really kind of small. So I'm like, dude, there's no way these guys invade for fun. Like, you're gonna get slaughtered. So they did it. And at the same time, you have so you have these guys here, and then you have Hezbollah, I believe, in the north, somewhere in the north over here. Netanyahu. Hey, that's funny. That's their prime minister, Netanyahu. I wonder if he got his name from that city. Now, what we don't want to see is Lebanon start attacking, or whoever's in. I think it's what, Hezbollah. So many names. Them start attacking. That would be not good. And then somebody said Syria is attacking. Golly. So you got Syria, Lebanon. These guys are just surrounded, bro. Surrounded. Iraq. You know, Iraq's crazy. You got Syria, Lebanon, Iraq, Jordan. I mean, Jordan is arguable. I don't even know what that is. But this is insane. They are surrounded. So yeah, I think we're coming right here. I think the US is starting to come into this corridor. That's kind of dangerous, huh? Surrounded. Tel Aviv. The Gaza Strip is small. I mean, at least they have an ocean. Well, that's unfortunate. How many portfolios do you have? Um, I I don't know. I don't know how people. I mean, in my head I got one, but I basically will trade stocks, and I just use that for trading and swing trading, and then I have a portfolio for crypto. Crypto one I don't really touch. I don't really touch the crypto because I think ultimately crypto is like a call option. I don't think it is. You just got to find the right ones. So I don't touch that one. And then if I, if I make enough, once we head to the end of the cycle, I'll convert a lot of that capital. I'll convert that capital as a trader. Yeah, I'm gonna pay a tax on it. I'll convert it back to my trading portfolio. Not all of it, but some of it until we hit the bottom of the cycle. That's kind of my game plan. Hit the top of the cycle, sell almost everything, and then obviously it's easy to say, it's not easy to do, and then get back and probably get short stocks at the top of the cycle. Stocks are different though. They might not get short, they might not shorten out the way or sell off the way that S&P does. We'll see when we get there. I'm tracking the macro cycle. Would you say what would macro conditions need to look like to want to buy bonds as these or lower levels or never? I mean, this might have been it. Me personally, I wouldn't buy bonds. I would not buy bonds because the risk reward isn't there. If I have to look 5 years in the future, unless we're going to be in like a global recession for 5 years, nah, I don't see that happening. So I wouldn't buy bonds at all. I would trade bonds, but I'm not even going to trade bonds. I still think crypto's a bit. When you line everything up, yes, bonds are going to appreciate. They have room in a portfolio for somebody who's ultra rich and can just park money and collect a yield risk free. But I'm here to take risk. I'm not here to go risk free. I haven't made it yet, right? I'll never make it. I'm not going risk free. Maybe if I had $1 billion, well, that's kind of crazy. If I had let's say I had $10 million, right? If I had $10 million, I might put $1 million into TLT just to get the yield and live off the yield and then trade the rest, which is probably stupid because you don't want to trade $9 million. But I wouldn't really trade. I'd probably put some in real estate. I'd move it around a little bit. So I wouldn't get in bonds though. I just, it's, if you have a fixed income, then if you can pay for your lifestyle, then basically you want to be in crypto at the bottom of the cycle, That's your best bet. Oh, that's here we go. There's the West Bank. Now I see the stuff. So you got these guys coming in. Dang, this reminds me of the Bible. Jesus was born in Bethlehem. Bethlehem is part of the Bethlehem in the crossfire. Beersheba. That's crazy. So what macro conditions would it look like? I didn't answer your question. I'm sorry. The macro conditions would have to be, the macro conditions would have to be, sorry, I went off task there, to buy bonds. First, you can't have inflation. So inflation would need to be back to 2%. I think you would need to have, for me to buy bonds, there would have to be inflation gone. You would have to have a very bad outlook for stocks where the Fed, because if the Fed, something would have to break. I think something would need a break to buy bonds. So it would be like commercial real estate, the banks break, the Fed doesn't step in with the Fed balance sheet, so they don't step in. Therefore, you get deposit flight, and then you get banks falling apart even further, and the Fed doesn't step in again, therefore businesses fail, people cannot spend at all. So basically, if you remove the Fed, then I'd buy bonds, but the Fed is going to step in. Yeah, Bukowski, you're in bonds to get that, and that's fair enough. I mean, everybody's going to trade differently. You're in that TMF, huh? You're in the TMF. I mean, yeah, if you catch the bottom of TMF when the Fed cuts rates, the issue is the Fed, if they don't cut rates for a whole year, how far does TMF go down? I still think it recovers, but here's your you know your upside, Bukowski. Here's your downside, Bukowski. Your downside is this. Let's say we get through the fourth quarter. I don't think bonds are going anywhere. They might recover a little bit, which I'm actually hoping bonds recover because that's going to help, you know, my positions. But let's say let's say bonds do recover. Oh, you're not in bonds now. Okay. Well, just, you know, just hypothetically, let's say the market, you know, consumers keep spending. We're headed into the fourth quarter, right? Holiday season, jobs are plentiful. So bonds are not that attractive still because growth is still up. So if growth is up, stocks are going to outperform bonds. Simple as that. Crypto is going to outperform bonds. Simple as that. Inflation comes down, makes bonds a little more attractive, obviously. And then you head into Q4. Christmas is over, right? Because people are going to sell before that, or maybe not. You go into January. Now consumers fall off a cliff. Now bonds look attractive because growth from the consumer is disappearing. Fiscal policy is still there, but maybe it doesn't hit as hard as we had hoped it would. Stocks recover to all-time highs, sell off. Now bonds start to look attractive. That's probably, I think somewhere in January to March, bonds will look the most attractive, if not summer. Now, the downside here is that as soon as things look weak, you know, you're in an election cycle, boom, you see more stimulus. Bonds aren't going to go anywhere. Nobody wants bonds when the economy cannot fall apart. They will not. I don't think they let the system fail. So we can weaken, but they come back in. Here's some mortgage moratoriums to pump up mortgages. Here's some stimulus checks for XYZ. Here's some more stimulus for credit card debt forgiveness, blah, blah, blah. Therefore, bonds just don't ever get attractive. And then the Fed does cut rates, you know, at some point, but they cut rates because inflation's back to 2%, which will make bonds more attractive. But who's going to run up higher if the Fed cuts rates? Who's going to go up faster, bonds or crypto? Bitcoin, right? NASDAQ is going to move faster than the bond market. Maybe I'm wrong, but I doubt it. It's never been a thing. Bond market is so gigantic. Crypto is not. So story is growth is just never collapses. When it does, the Fed steps in. And bonds never are really that attractive. That's the downside. It doesn't mean it has to be true. People could collect. I mean, you're at 4% yield. It's really attractive. So, you know, foreign entities are going to buy it. We're getting that buy right now. I sold TLT at 102. I actually bought TLT also, and I sold it. I kept one share because I was like, dang, this thing is going down again. Call option with no expiry. Yeah, exactly. Bitcoin or crypto is a call option with no expiry. Only thing is you draw down 80%. So the question is, do you sell and pay the tax on it? Do you pay 20, 30% tax on 1,000% gain? And then buy it back when it's down 80%, which would be more than enough to offset the tax? Or do you just hold it? Well, if you just hold it and you can wait, you're definitely going to be safer, right? It's going to be easy. It's going to be safe, but you just have to wait. You're just staying patient. Most people can't be patient. Now, if you sell it up 1,000%, right? And then you wait for the 80%, assuming that's the top, then you wait for an 80% retracement, 70% retracement, depending on who. Now, Bitcoin might not do that because the ETF is coming. You know, you're going to get a lot of fund flows that don't sell. And so Bitcoin might not retrace. This might be your last, you know, the last time you can really buy Bitcoin and not sell it. You know, unless it gets to like 250 or 500K in the next cycle, which who knows? But anyways, point being, you sell it up 1,000x, you buy it back down, it's down 80%, and you pay the taxes on it. So let's say you made $10,000 on $1,000, you made 10,000, you pay 2,000 in taxes, you have 8K left, and then Bitcoin goes all the way back down, 80%, you buy back the same amount you had plus more, right? It's still a tricky game. It's safer always just to hold, but there's other things you can do with it, which I'm going to put together a curriculum pretty soon. I'm going to have some stuff out on how I do it. Again, I'm making content, so you guys know I'm not trying to scam you. Those of you know I've been here for a while. So if you want to try it out, it'll be available. I'm just taking the time because I think people should be educated more than anything, not just trade. I don't even think you should trade for a year, maybe 2 years, maybe a little bit of size. You want to be educated as possible because you could do it for the rest of your life. And if that's the case, you better get it right the first time. Don't ruin your life, right? So would you say, Ranveer, China could see this as an opportunity to attack Taiwan? Oh, yeah, going back to that, you're right. We talked about that yesterday. China definitely could see if we send so many military, they're probably seeing, does it happen? Maybe. You never know with this stuff. Black swan events, right? I know China has sent some, they've been sending some ships, we're all going off topic, way over to, they've been sending some ships really far, which is kind of like Japan is signaling, hey, these guys are sending ships. Let me see what it looks like over here. Where's Taiwan? They've been sending some ships really close. So surrounding Taiwan. And Taiwan is so close to China. I mean, it's really close to Hong Kong too. So we'll see how that plays out. I really doubt it. They don't want to mess up their own economy. They probably want to wait till the Fed to cut rates and then they'll try to attack. Because if they do it while the Fed is tight, they're going to destroy their economy. People didn't expect the economy to be this strong before summer. And remember, I don't know if you guys were with me, but I said, hey, the economy should be stronger than people expect because of the fiscal, because of all the fiscal policy from the White House, which is probably just not information that it's like, when does the fiscal come? What form does it take? I don't know, but markets are liking it. And the market's going to outrun the economy. I don't know. Look at TMF when Fed cuts, it's up 100 to 200%. Oh, okay, I see what you're saying, Bukowski. The 3x leveraged. I mean, in that case, you're right. I don't think TMF's a bad trade. I just think it's hard finding the bottom in it, right? It's hard to find the bottom for TMF. And those 3x leverage stuff, that 3x leverage stuff is tough. The other thing too, do rates ever really go back? Do they cut rates enough all the way to 2%? That's what you're hoping, right? You're hoping they cut rates to 2%. Where when it comes to like Tesla or Palantir or crypto, it doesn't matter how much they cut rates as long as they cut it all. So TMF is going to depend on, dang, that thing goes, if it goes to all-time highs, that's 1,000%. I wouldn't doubt it's a great trade. I think it'll be a great trade. I mean, I think you start nibbling on it. I don't know if you buy options because that theta is going to eat you away, but to own some TMF, sure. And people, you know, who own bonds because they want a recession. They really want a recession. We got the XRP Queen on here. How does it feel, XRP Queen, to know that Chainlink pretty much eliminated the use case for XRP? Like 90% of the use case for XRP. How does that feel? Over here stirring the pot. Yep, stocks rise as Wall Street reduces Fed bets. I think the Fed pauses here, guys. That's my bet right now. It's time to nibble on crypto. Yep, 100%. Time to nibble on crypto. All right, we're in 90 minutes. Any other questions or concerns? I'm going to give you guys a minute. I mean, tomorrow we do have PPI. We'll do the report on PPI, obviously. We'll keep up with the war. Right now, it looks like the war could be escalating from the north. Okay, but you know, vicariously, I don't even know if I'm using that word right. This is also increasing bond inflows, which lowers rates. So it's kind of a Goldilocks scenario. Growth is stronger than expected. The Fed is expected to pause. Fourth quarter spending, seasonal employment, seasonal spending, seasonal strength performance by S&P. Rates are coming down. Dollar comes down. Obviously, oil is the wild card. It's a really good setup. You need a really, really bad black swan for something to happen, something to go wrong, I think. So I think we're looking at a really good setup. Unfortunately, it's off the back of a very bad event, but that is life. Bro, SPY is in a bear flag on the 15-minute chart. I mean, I wish bear flags told you the truth, right? I think bear flags are more prominent when you're coming from the highs. This guy said the 15-minute chart, bro. The 15-minute chart. I'm looking at the bear flag right now. Bear flag on the 15-minute chart. What? Bro, I don't know what you're talking about, bro. Oh, you're talking about that recent rally. Yeah. Okay, I see what you're saying. But that bear flag was, yeah, that is a bear flag. Okay, I see what you're saying now. I mean, there's nothing wrong with it. It's after hours. You're going to trade after hours. It probably does break down back to the open. I wouldn't doubt. So like here, we'll do this to end it. We'll do this to end it unless you have more stuff. He said the bear flag. This is what he's pointing out here. And I'm going to go on my actual trading platform. Conflict in Israel. Oh, look at Fed Kashkari says conflict in Israel if it gets big enough could have an impact for the US economy. Yeah, exactly. That's why I think they're going to step back and not do anything. So this is the bear flag, but I mean, when you zone in, is it really a bear flag? I mean, it's just weakness. I wouldn't really call that a bear flag. If anything, we come back and fill the gap down here at 432, which is still making a lower high. I'm sorry, a higher low. So my guess is we come back down pre-market tomorrow. We bounce off 433, 432 at the lowest. We have those support levels, and then we move up. Previous day close, or we don't, especially head into earnings. So what is it? 3 days. This Friday, we also have bank earnings. We got bank earnings. We got JP. We got the biggest asset manager and the biggest bank in the world. The two biggest banks and asset managers in the world on Friday. I think it's Friday. JP Morgan and BlackRock. Right? And guess what? Sergey Nazarov is the co-founder of Chainlink. He is speaking at a JP Morgan event pretty soon here. I don't know if my brother's on here. He'll make it clear. He's speaking at the JP Morgan event, bro. They're going to be using Chainlink. It's very bullish. And also BlackRock's already tokenizing their assets. You know, they're all about interoperability. Nobody's going to say go buy Chainlink, but this is the opportunity, right? I think that's all I wanted to say for you guys. Stay blessed as always. We'll keep up with the war, with the macro, with the markets. Other than that, enjoy your life. Stay fit, eat healthy, get better every day. Stay focused. Don't let nobody deter you off your goals. Okay? Say no. Be able to say, if you're going to be successful, you got to be able to say no. You got to be able to say no and stay focused on what you got to do, right? Make sure you're able to do that. You know, it's all about getting better, improving. So keep it up. You guys stay blessed. I'll catch you next time. Be safe. Peace out. Appreciate you guys too, man. Thanks for joining the stream. As always, thanks for joining. I'm grateful that you guys show up every single day. No, I'm just